Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, market rundown heading into Friday, March 31st. Checking it on SPY. Bullish break of 235.81. That was a nice clear bull signal to be playing off of for day trading, as that was the double top, and we had the middle Bollinger Band right there and the 200-hour moving average resistance all lining up at the same place. And the bulls breaking that level showed that they had continuation and strength. So we are seeing low volume. That's the one thing that the bulls could change, or would change if they could. So volume, bulls always want to see increasing on the way to the upside, and when it's decreasing on the way to the upside, that to me tells me that the bulls are likely running out of steam. So we're keeping an eye on that volume. But in terms of resistance, there's not a ton of resistance where we stand currently. 236.52. And then I'm looking up here at the high of the dump day, 237.61. But there is a key resistance to be looking at before that, and it is the downtrend resistance line here. And if we do not see an increase in bull volume, I can't imagine that the bulls are going to have enough strength to get over that level, at least on the first test. So I'm going to be watching that downtrend resistance line. Tomorrow it's going to be at about 236.90. We'll see if the bulls have the momentum there. And if you're playing the S&P 500 here, you need to be watching the dollar as well, because the correlation between the two over the past 4 days has been very strong. And the dollar momentum has certainly been helping the market momentum and vice versa, in my opinion, as they are very strongly correlated. So as of right now, bulls in full control, watching this downtrend resistance line, and that could be tested tomorrow. The weekly time frame, full-on recovery by the bulls, where we have that recent high. And we did see that bearish reversal candlestick form. Looked like we were going to start pulling back, but then the bulls showed up here, saved the exponential moving averages on the weekly time frame, and the bulls are showing a lot of strength, not a lot of upper wick here on the weekly time frame, showing that strength and a strong close here. So the bears, if they wanted to take over here, they're really going to have to see a $2 move to the downside, which is very unlikely at this point. And I say a $2 move to the downside because that would lose these exponential moving average supports, which currently right now are holding strong and steady. So bulls pretty much couldn't have asked for a better reaction to this week in terms of follow through and recovery from that dump. I'm just still watching this lower high pattern because we did get that lower high and lower low, and the bulls will be a lot more comfortable when we break these 238 resistances that set our lower high in reaction to the FOMC. Checking in on IWM, very strong follow through, little uptick in bull volume and a bullish MACD cross. Same thing with the lower high pattern. The resistance is up here at 138.33, and I would be very surprised if the bulls could get through that level without consolidating first. After 4 huge green days in a row, bulls are still extremely strong, closing up near the high, but we will be keeping an eye out for a bearish reversal candlestick on the daily time frame, which would indicate that we will likely pull back, try to establish a higher low of support, and then make another move up towards this resistance of 138.33. Weekly time frame trying to regain the middle Bollinger Band. And we were on the verge of this bearish TCG cross of these exponential moving averages, but this strong week by the bulls is fending that off, and it's negating that cross right now. And if the bulls can keep this momentum up, it will negate that cross for the time being, and we are looking at the highs 138.20 and 138.33. So the bulls are showing a lot of momentum in IWM. They came roaring back from this double bottom. It was a double bottom down to the penny, 132.40, 132.40, and since then, we saw almost a $5 move to the upside. So lots of strength there for IWM. QQQ just as strong here. New all-time high. Tech sector on fire still. And QQQ still the lead market here that we're covering. Very strong. Upper Bollinger Band is resistance. However, we've rejected from that level the past 3 days. Tomorrow it will be up around 132.70. And we'll have to update that level at the open. You can see the bulls are clearly struggling to close over that level. In the past 2 weeks, we've rejected 5 times and now 3 times over the past 12 days. Increase in bull volume here as well, on the verge of a bullish MACD cross, and the weekly time frame is negating that bearish reversal spinning top candlestick from last week. Holding exponential support, closing up near the high of the week, and I would say IWM and QQQ have stronger momentum right now on their daily time frame due to that slight uptick in volume, whereas the S&P 500 did not get that uptick in volume, and we have that clear lower high resistance level to be looking at. So all in all, everybody made a really strong recovery this week, and the panic has subsided. No all-out dump, just one really bearish day, some follow-through to the downside, but a big-time recovery for the bulls. So that's what we've got heading into tomorrow. I appreciate you watching. We'll see how we wrap up this week, watching the size of the wicks on the weekly time frame to see where momentum is heading as we head into next week. See you soon. Have a great night.